Folks, I want to talk to you about how you could take advantage of this market relatively safely. That's right. You're probably thinking to yourself, Roger, what in the world are you talking about? The S&P 500 literally erased all gains since October in 5 trading sessions. And yes, I told you that was going to happen. I told you momentum levels were at an all-time high, 5-year high actually. But it looks like the market is finally cooling off, and now momentum levels are substantially lower. They're not out of whack. They're now actually out of whack to the downside. And this is what you're seeing right now. This chart, this is a medium-term support level. So I think there's a good chance the S&P will hold around the 280 level. Now, what do you do during that time? It's not a good time to go long because markets still have a lot of instability. But one way to maximize your returns during this period of time is to utilize the volatility and the fear level of the market to your advantage. What do I mean by that? Well, let's say that this selling pressure for the most part is over. Imagine the level of fear that's priced into this market right now. Volatility on the S&P options is 4 times their usual level. Well, what does that mean? Well, what we do in this case is we find the strongest stocks on Wall Street. In this case, NVIDIA, for example, and Alibaba tend to be very, very strong stocks. Now, do I suggest you buy NVIDIA? No, although it's not that bad and it's hovering right around the 50-day moving average. Let's take a look here. Let's look at the 50-day moving average. Yep. Just as I thought. It's hovering right around the 50-day moving average, and it looks to me like it bottomed out, especially if the stock market is done for now. The bottom line is the volatility is so high and the price has gone down from 315 all the way to 341. There is probably some good opportunities to sell income spreads. That's right. Put bull put spreads. I mix them up sometimes because it's bear call spreads or bull put spreads. But bull put spreads take advantage of markets when you think the market is done going down. Now, I don't suggest that you go in the money or close to here, but I suggest you go to the 225 level. That's quite a bit, and the market would have to continue falling quite a bit from where it is now and stay there for quite a while. So let's say we were looking at NVIDIA, and let's say we were going to go out 2 weeks. 2 weeks till expiration. And let's say we were looking at the 225-ish strike price. 225, 227.50. That's pretty far out of our range. That's like right around here. That means we need to see another downside of about 1,000 points on the Dow, which may happen, but not now. Even if it happens, there's a good chance we're going to see a bounce, and that will cause a lot of this value that we're going to take in to decay. So going back here, let's say we do a spread by selling the 227.50 call put and buying the 225 put. Now, looking at the price level here, we could probably do this for about 45 cents. That means every contract is 40 bucks. Every 10 contracts is $400. Now, the risk is $2.50 minus the premium, so your risk is about $2. But the odds of NVIDIA going down all the way here and staying here 2 weeks from now is relatively small, especially after we've seen this already. I mean, look at this thing. This is crazy. From 340 all the way to 280. That's massive drop in the S&P. Now, the S&P would probably have to go all the way down to 260 for us to get hit. So a bull put spread around the 225, 227 level on NVIDIA is a good risk to reward trade based on this scenario. And again, you're not limited to NVIDIA. BABA, another one. All I did was this. Let me show you what I did. I went to my stock fetcher and I looked at my filters. And what I did was I looked at the top S&P 500 stocks. And I wanted to find stocks. Here we go. I wanted to find stocks that were really, really strong right now. And I found, and that had a lot of tech exposure because they have a lot of volatility, and tech is actually holding up right now better than the S&P 500. This is the S&P 500 right here. Let me put on a 200-day line for you so you can get an idea of what I'm talking about here. Notice where the 200-day moving average is on the S&P. You should see it in a second. See, we crossed it 2 days ago. But look at the NASDAQ 100. NASDAQ 100 has those big growth tech stocks like BIBB, and Alibaba and NVIDIA and so forth, Amazon. They have a lot of premium, a lot of volatility. So if you look at the NASDAQ 100, you will actually see that in comparison, it's just now touching the 200-day moving average. And that usually tells us markets are done, at least for now, or that we can expect a nice big bounce. So again, Alibaba, all I did was I went and picked the top stocks. Tesla is one of them, NVIDIA is one of them, BIBB is one of them, Netflix is one of them, JD is one of them. All these stocks are holding on pretty good right now, especially in this downside correction. So the odds are when the market starts bouncing up, they will be the first ones to bounce higher, and they're giving us the biggest resilience to the downside. I mean, let's take a look at Tesla here and see how it looks compared to the overall market. Remember, Tesla was just at near $1,000 just a little while ago when everybody thought that it was a short squeeze. So let's take a look. The stock is still at $642. It's still barely, see, it's still, let's see where the 50-day line is. That's the, let's see, is that the 200-day line? Yeah, that's the 200-day line. Let's see the 50-day line. If you look at the 50-day line, you will see that the stock is right at the 50-day moving average, and it takes a lot more to get to the 200-day moving average. So the broad market's at the 200-day moving average, Tesla's at a 50-day moving average. That means it's overall stronger than the market. So again, the best thing to do when bears are in control of the market after a huge sell-off that happened fast is to find the strongest stocks, right here, the strongest stocks, stocks that are making new highs, stocks that are within 5% of all-time highs. Use my relative strength scanner to find the best, strongest stocks in the S&P 500 or NASDAQ 100, which we could do like this. Let me show you. And again, I'm doing this just to give you an idea. See, the same stocks will be there. Tesla, NVIDIA, Netflix, BIBB. 1, 2, 3, 4, 5, 6, 7, 8. We're talking top 10% stocks. So again, NASDAQ is the strongest index. You want stocks that are the most resilient to downside and have the most volatility, option volatility premium. And these stocks are the ones. So bull put spreads after a strong, fast downside correction sometimes can be a great way to collect extra premium and not put your account through the added risk of holding positions through the volatility. I hope that helps. Folks, if you like this, send me an email, support@marketgeeks.com, or like our channel. Talk soon.